Good morning, everyone. It is January 21st, and this is Nadex Morning Analysis, where we look at some hot spots in the markets where you might try to look for opportunities for today. My name is Todd Rich. I'm with Nadex. With me is Brian Caprice from Keep Trading Simple. Before Brian and I jump into it, I need to share that trading may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And lastly, this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So with that, before I flip it over to Brian, I just kind of want to tee up the conversation. We have a new administration. Pretty exciting inauguration if you watched it. But with the new administration came a flurry of executive orders. So Brian, let's actually talk a little bit about that, specifically how that is currently impacting our neighbors to the north. So let's talk about
so
Canada.
it's actually, so I mean, if you look at right now, you can see, and let me make it a little bit bigger so it's a little easier for you guys to see. You can see that the Canadian dollar being down 74 right now is kind of the leading in charge. And 30 minutes ago, this was up over 100. So it's quite big news. Couple different stories happening with Canada right now. One is obviously Canada's recovery. They obviously had some major issues, with Toronto and Vancouver, BC, and as you guys know, my wife's family lives in Vancouver, BC. So I kind of get news on both fronts, and it's pretty interesting. So there's quite a bit of strife. So one of the things, if you guys know, according to Biden's campaign promises and everything, he's very anti-Keystone Pipeline, greener earth, greener everything. One of his first executive orders yesterday was to cancel the Keystone Pipeline. Just that's it, boom, done, right there. And Canada had said, hey, listen, they knew this was coming to some extent. And they were reaching out and saying, hey, listen, there needs to be discussion about this. This is a big kind of governmental uptake and things that they've done. And this is the response that we saw last night. Right. Basically, the PM is calling this an absolute insult to Canada, that they're seeking retaliation. They've invested over $1.1 billion of taxpayer money to jumpstart it. There's 2,000 jobs on the line. Very politically charged situation. There's numerous articles from Reuters yesterday about it. Basically that Trudeau is trying to, soften ties between U.S. and Canada because he's probably most likely going to have a snap election this year. And again, the popular vote was a big thing last year. So there's some strife on that front. At the same time, here's the other side of that story. And again, does the Keystone Pipeline really affect oil right now? The answer is no, because it's not online yet. It's not like it's pumping. Right. It's not going to change the supply. It's more of a future thing. But I will say overall, it is a very big deal for the Canadian government because they're saying that there's about $30 billion worth of revenue that was going to come from that. It was going to be about 2.8% of Canadian GDP. So it is a very large thing. Now, looking into today's news, you can see right here that this morning, Canada is a little bit farther ahead. And they're talking about we're not going to need as much quantitative easing over time. Again, they're not seeing speculative activity in the housing market. So a lot of the signs that are coming out of Canada is that their economy is quite strong the way that it is now, even without that pipeline. So it's one of those things, could there be some drama back and forth? I'm going to say drama because that's really all it is.
It is going to be drama.
There absolutely could be, and it could affect the markets. And right now, let me go across the dollar CAD. We've seen the dollar CAD really collapse, and really since kind of the inauguration happened, we're talking about 200 pips to the downside. Yeah. That's a lot. The normal ATR on this one is about 96. And we saw some absolutely major movements in this one very, very fast. Now, it is actually approaching a level, and I'll bring it down here onto a 4-hour and kind of adjust it a little bit. Let me get my makeshift little kind of cursor thing here, since the cursor obviously doesn't work. But anyway, if you follow the yellow dot here, you can see down here we have an area of demand where buyers have stepped in on a daily level. So much larger time frame up here at 125.70 area. You can see we have a little bit of stabilization right now. It's kind of basing and going sideways. And again, thank you, Jin. A lot of this has to do with the executive orders, what's going to continue forward. Is there going to be discussion? A lot of stuff is going on for the Canadian dollar right now. So again, seeing a very large time frame level, it's definitely something you got to keep focus on. And again, 125.65 on a daily level is where we're seeing buyers have stepped in the past. So again, we got about 50 pips to go. Could the U.S. session today, again, with continued dollar weakness, which we are seeing across the board. And again, as more executive orders get signed, more money goes out the door, more dollar weakness. It's definitely lining up that this could be an area for a potential bounce, whether today, tomorrow, or even going into Sunday.
All right. So let's actually jump over to the Nadex platform and take a look. I just brought this up. These are the knockouts, if you're not familiar, and you can always look at the knockout ranges by simply clicking on the blue lines. But if you, and here's that level, that 125.70-ish level that you were calling out. As we approach that level, if someone wanted to take an opportunity to potentially look for that bounce, a knockout might be a decent way to do that, in as much as if there is a rebound, you could participate to the upside, and if not, if there's something else that washes out, your risk for and this has got I mean, our knockouts are all weekly, but there's only another day left in the week, so you got another day and 5 hours. Your downside is actually rather limited. If it were to drop down below the floor, you'd be knocked out of the trade, and so it's essentially a stop loss down there beneath you, but it's something to look at. So this might actually be good for an opportunity if this is what you were looking for with a knockout. Just for comparison, let's go ahead and just take a quick peek over at the call spreads. Go to call spreads Forex. Let's scroll down to the US dollar CAD. There we go. And you know what? I'm going to go ahead and just choose. Let's just see what we got in the weeklies for the moment. I mean, there's always a chance you could look daily. Yeah, this, there's. Oh, I wanted to collapse that a little bit. There we go. I guess you'd really have to kind of click around and see if there's a call spread. There's a call spread in this range, a little bit, where if you were looking for some upside and you wanted to play it again, you've got upside, your downside in a call spread. It's limited. I mean, everything in Nadex, defined risk, defined reward. So it all matters. It all matters on pick your poison. There's some call spreads and some knockouts that could be interesting if we are going to see the US CAD bounce off of that 125.70-ish level where buyers have stepped in before. So that's one good spot to take a look at.
Yeah, and also too, I would just end to that. It may not be a today thing. Right now, we're having a little bit of reaction because of the unemployment claim and the Canadian unemployment claims. But again, it being a larger time frame level, again, something on like the daily, this may be something that, again, if it just meanders and kind of goes sideways waiting for the rest of the cabinet to get approved, this could be something that early next week, that could be an opportunity where we potentially take a call spread or even a knockout off of that based off the Sunday night pricing. So again, may not be today because again, we're talking large time frame, not these small, 30-minute time frames. We're talking much, much larger, and those levels tend to be stronger. And again, taking advantage of a knockout that has 5 days worth of duration.
I like that. Right. So that is because our knockouts do go out a week. If it's not something for today or tomorrow, keep your eye on the US dollar, Canadian dollar. This is a Thursday. We've got today and tomorrow to trade, but depending upon what's going on, how the news comes out, as more executive orders come out, keep an eye on this one for Sunday night when we reset all those and list new knockout contracts that got an entire week. So I like it.
Right.
Let's start teeing people up with some things to look at. The other thing I'd like to jump over, just because we've been following it so closely, and it's rather interesting because we've set it up, is gold. We've been talking about gold a lot lately. I'm going to go ahead and flip this over to you, and let's take a peek at what's been going on at gold.
I mean, so we've had this level, and we talked about kind of through that 1860 level, and we were really looking for a pullback. We wanted to see some stabilization there as this continued to drive higher up into the 1890 range. And you can see, based off of that low yesterday morning, it came down and grabbed that kind of same pattern, right? Let me grab my little makeshift cursor, right? We saw this here where we had broken through the level, pulled back and grabbed it. We were waiting for that same type scenario, and it did give us a little pullback and ran about halfway to where we expected target-wise before pushing higher. And then what happened is we hit the European session, and we gas, and it started to pull back down. And now we're starting to see basing at that level again. And that, typically is not necessarily a bad sign. The U.S. market is coming online. But we saw this kind of decline here, and this is a European story. So if anybody's been watching this morning, and actually, let me see if I can pull it up real quick over here. There's been a lot of ECB-based data that you can see that their monetary policy statements, the press conference is all happening right now. And again, a lot of people kind of understood what was happening. The European Union is not in a good place right now. They're talking about we need ample degree of monetary stimulus is essential. They're mentioning, the digital euro. They need very coordinated, and I think, where is it right here? Is it this one? Yeah, fiscal measures need to be targeted, temporary. We need an aid package. It needs to be operational without delay. The European Union is in a very, very weak position. What makes this case interesting, again, is the fact that the euro dollar is up 44 pips in the last 24 hours, showing that there is that much more dollar weakness out there. Now, in the last 60 minutes, you can see that it's all red up here. So again, we are finally seeing it kind of overtake the dollar as being the weaker currency. But right now, it's a battle to see who can become weaker. They're talking about slow vaccine rollouts. There's a lot of stuff in there. And again, what that's kind of driven us down. Now, the U.S. market is coming online now. So all that negative kind of gold-based data is kind of getting erased. I don't know what President Biden is going to start signing into, today, but every time there's another support for this or stimulus for that, the more money that is printed tends to lead towards more inflation. Now, everybody's talking packages, but we haven't really, again, Canada's starting to see a little bit of a recovery. Australia is starting to see a little bit of it. I know China has talked about the reaffirming, 6 or 7% growth this year. So there are signs of recovery coming. And that's where the inflation story comes in. The question is, can we get over all the negativity about this person shutting down or that person shutting down? Because while we are still in the heat of the pandemic right now, the inflation is just going to be there. So while this is a technical level, and again, this is definitely a possible bounce higher. Any bounces higher, I'd be looking for taking profit at, again, potentially over here in this 1890 range. That's the last time we had a level of basing and a strong punch down. But again, right now, this story is going to be about, hey, listen, is inflation coming in? Is the United States going to keep printing money left and right? And if so, again, that could be where the bounce is. And remember, a lot of this downdraw, too, is probably profit taking. Right. Remember, as this rallies higher, people are like, oh, I got to get in. I'm missing it. It's here, right? And then all of a sudden, it's like, hey, listen, I got to sell. Let me take my profit and find another place to buy, right? So what happens is retail traders are buying. It pulls back down. They're hitting their stop losses, going, oh my God, right? Because this is a support zone, right? And now we're seeing some basing. So again, one of two things is going to happen. If we see no real big executive order signs today, no more talks of stimulus, could see a roll back down. But again, this is a decent level for basing. Again, a little bit of a confirmation, just one executive order in. Boom, this thing pops higher. And again, it is going to go that way eventually. Just whether or not today is the day or not, All
right. I'm just going to drop this over again on the Nadex platform. And I did just do a quick little drawing because I know you like to call it the Harry Potter trade.
Yeah, the lightning bolt.
Yep. Right, the lightning bolt. It looks like a lightning bolt. And this is something we've been calling out. This is actually, if you go back and play yesterday's episode, we've seen some buyers step in all the way down at 1830. Sellers have stepped in at 1860. And yesterday we actually talked about it. We said, hey, watch for gold to base a little bit in that 1860 level and it chopped along and break through. And once it breaks through, you look for that pullback down to about that level before it bounces again. And we actually, that played out to a T. It looks like a lightning bolt. It broke through, it came back down close to this level and then took off again. Now, since then, we have seen it pull all the way back down. But as you mentioned, that was because we got some European economic data. And so as people keep digesting how the globe is recovering from this pandemic, we know that we are all struggling. That will impact the price of gold because that's what, it'll impact people's perception on inflation. So interesting how that set up. If you were following along yesterday and you saw this opportunity, it was definitely an opportunity and it's something you could have profited on. I'm on binary options here. And you see how many binary option here. I'm going to try to spread this out a little bit, but there were binary option levels when it broke through 1, 2, 3. It started to head up to this fourth one. There was definitely some way to trade this with binaries. And again, you didn't have to wait until it expired. you could have traded one of these at one point. This binary option right here, um, it was above 50. I mean, right? It was trading above the line. It was above 50. So, I mean, had you picked it up down around here, it was probably, you know, it was in the teens at some point, probably where it is
Mhm.
now. There was definitely some trading opportunity that you could do when you were with the binary options as gold is bouncing around, and we can see it's the volatility in gold right now is kind of kicked up. All right,
Mhm.
so I think that's enough for today. Brian and I'll be back tomorrow. Brian, before we wrap it up, is there anything else that you would here? Let me flip this over to you. If there's any other things that you would like to point out quickly before we let everyone go.
Yeah, I would say definitely oil. We've seen a little bit of a pullback because we did mention that. Oil inventory report is tomorrow, so we will get to cover that one. And then I found this news too, Todd, just a little while ago, and I feel like you didn't mention it, but IG is acquiring Tasty Trade, guys. If you were did not see that, I saw this. It was on Forex Factory, printed right there in the news from this morning, about 4 hours ago. So I'm pretty excited to see what type of things are coming down the road from this one, Todd.
Yeah, as am I. Definitely some interesting news, and I'm looking forward to having some new colleagues to work with. So yeah,
Yeah, it
exciting
sounds pretty
news,
cool. I know you don't know
exciting
anything
times.
yet, so
So all right, hey, with that, if you have any questions for Nadex, please email us customerservice@nadex.com. We are very accessible. We're here to help. If you've got any questions for Brian, you can email him as well, support@keeptradingsimple. I will point out that trustpilot.com/review/nadex.com. Would love it if you could give us a review. Greatly appreciated. Take a few seconds, just go in there. We love to get the feedback, and we would love to have the review. With that, we've got 13 minutes before the U.S. equity markets open. Brian and I will be back again tomorrow morning to wrap up the week. And with that, I want to wish everyone good luck in the markets.